Declare a recess of the committee at any time. I welcome everybody to the hearing, which seeks to examine strategies the federal government can adopt to better address improper payments. This is a subject of this subcommittee going way back. In fact, one of my first hearings I remember with former chair of the subcommittee, Todd Platt, talking about improper payments almost 14 years ago. Hopefully, things have improved, but we'll see. Chair now recognizes himself for my opening statement. Federal government manages and allocates trillions of dollars each year to programs that help individuals, families, and businesses, whether that be Social Security, Medicare, crop insurance for farmers, school lunch benefits, health insurance for children, and a host of other essential programs. But that money does not always go where Congress intends. For fiscal year 2021, 86 high-risk federal programs estimated improper payments. Of their $3.9 trillion in outlays, 7.2% were paid improperly, it's estimated. That translates into $281 billion, more than any other fiscal year since 2003. Today's hearing examines the causes of those improper payments and explores solutions for reducing them. The law defines an improper payment as, quote, any payment that should not have been made or that was made in an incorrect amount, including an overpayment or an underpayment, under a statutory, contractual, administrative, or other legally applicable requirement. Improper payments are an imperfect but valuable way of measuring program integrity. In short, they help us to answer the question, is the federal government distributing money in the way Congress intended? If federal improper payments were low, the answer would clearly be yes. Unfortunately, they're not. I should be clear, there are many causes of improper payments. Some improper payments can be attributed to fraud, but many are simply paperwork errors. For example, when an individual or business accidentally checks a box on a form, perhaps because of confusing instructions, language barriers, or bad internet access, and by checking that box, it affects the amount provided. Some improper payments are even underpayments, and when the government pays someone less than the amount for which they in fact qualify. Unfortunately, more often than not, government does not know the cause of any particular improper payment. Not knowing a payment's error cause makes it difficult to distinguish fraud from anything else. And without good data to help us identify root causes of these improper payments, the government can't make evidence-driven decisions that enhance program integrity to prevent fraudsters from gaining unlawful access to government services and to ensure individuals and businesses access those services for which they qualify. In short, bad data and deteriorating IT infrastructure all too often makes it, in fact, near impossible to fix the problem we see today without reinvigorating our IT investments. History seems to agree. Though improper payments have been a priority for Congress since the beginning of the 21st century, they remain high and they continue to grow, as this chart, which I hope will be up. Oh, there it is, as that chart shows. Thank you, Joshua. If you look at the screen, you'll see how improper payments have steadily grown since Congress first required tracking and measurement under the Improper Payments Information Act of 2002. As the figure shows, Congress has enacted 5 bills into law that sought to identify and reduce these improper payments in 2002, in 2010, in 2012, 2016, and 2019. Despite the efforts, improper payments are at an all-time high. So we've gotten better at reporting, not so good at reducing. According to the 2020 American Customer Satisfaction Index, the federal government ranks among the bottom of all industries in the United States in customer satisfaction. Public trust in government remains near a historic low. As April of last year, only 24% of individuals expressed trust in government. These low scores are the result, all too often, of poor customer experience and excessive improper payments. We can and must do better to enhance program integrity in the federal government, ensuring federal assistance goes to everyone Congress intended to receive it and nobody we didn't. Clearly, things have to change. To help enact such change, I hope today's hearing will hit home 3 main points. First, we must keep in mind our motivation for reducing improper payments. Put simply, it is to ensure that money goes where Congress intends. That means we must do everything we can to stop those elements from stealing government funds, those criminal syndicates who are organized to do that. And it also means we must ensure government funds go to everyone Congress intends to reach in an accurate way. Second, there exists a false trade-off in the minds of some between preventing fraud and designing accessible, intuitive, and equitable services. In fact, when done right, governments can deploy modern technologies that prevent fraud and improve the customer experience, designing more elegant and simple platforms by which families and businesses and individuals can apply for and access the services they need and for which they're qualified. Government programs can combat waste, fraud, and abuse while they save and improve lives. Finally, I want to highlight that good quality data and the modern IT infrastructure that can support its collection, sharing, and analysis are foundational to tackling improper payments. Data is key to reducing paperwork errors and fraud without putting a burden on the public. Using data as a solution is not a controversial thing. Last July, the Office of Management and Budget and the Pandemic Response Accountability Committee issued a payment integrity alert on the use of automation and data analytics to, quote, support agency missions while mitigating payment integrity risks, unquote. Using and matching data sets to identify potential improper payments, fraudulent or otherwise, is fundamental and nonpartisan. We need the will to make it happen. I plan to introduce legislation built upon these 3 principles. The bill will establish an office dedicated to program integrity to implement robust oversight of federal agencies' program integrity efforts. Importantly, the office will shift from a compliance-based to an action-oriented approach by requiring federal programs with significant risk of improper payments to implement proactive, data-driven, and outcome-oriented anti-fraud controls. In addition, the bill would ensure that agencies minimize the burden of their anti-fraud controls on the public. By focusing efforts on data collection, sharing, and analysis, the new office would enhance program integrity in the highest priority federal programs without putting undue burdens on those programs' customers. At its core, the bill would be about getting money to the places Congress wants it to go and preventing that money from going to places we don't. Republicans or Democrats, I think, can all agree that that's our ultimate goal. I look forward to working with my colleagues on both sides of the aisle on this legislation and hope we can pass it into law to get these numbers down. I now recognize the ranking member for his opening statement.
Thank you so much, Chairman Conley. I appreciate you calling this long overdue hearing. Republicans often are skeptical, I think it's fair to say, of government programs and how they will work. And my Democratic colleagues often hold a different view on these things, but we know with certainty that government assistance will be totally ineffective if those funds never even reach the intended recipients. Improper payments have been a thorn in the side of our government probably forever. The problem, however, is certainly getting worse, and it was getting worse even before COVID, but the trillions of dollars that were spent in pandemic assistance ushered in a wave of fraud, quite frankly, the likes of which we've never experienced before. Estimates literally range into the hundreds of billions of dollars. and much of that is feared to have been lost to organized crime in even countries like Nigeria and China and Russia. For all we know, American tax dollars could actually be helping to fund Putin's war against Ukraine. Reports began to surface last year regarding the magnitude of the problem, and yet here we are, over a year since the American Rescue Plan, and another $2 trillion gone, signed into law, and this is the first hearing we've had on this subject. If the state and local funding of the American Rescue Plan is any guide, it appears the Democratic plan to fight fraud is simply to let people spend it any way they want to spend it, no rules, therefore no fraud. Earlier this month, the White House put out a fact sheet on what they had done or what they were going to do around fraud and improper payments. That's good, that's fine, that's great. But it talks about how last May they got a lot of people together from ARP, the coordinator, PRAC, IGs, GAO, NSC, and others, in order to discuss government-wide steps to prevent individuals from defrauding public benefit programs. But the question is, what's been done? We don't need more meetings. We need action to stop the fraud and the abuse that's been taking place. And quite frankly, with all, and I mean this sincerely, with all due respect to every one of our witnesses that are here today, frankly, Chairman, we should be hearing directly from the Biden administration today. And then there's this that was also in the fact sheet that I saw this morning, a quote, reestablished respect for and transparency with the oversight community, end quote. I guess the result of that means more meetings. But in all honesty, give me a break. We literally have no idea what's being done on anything other than more talk that's been taking place. This should be a top priority. This should be considered an emergency for this administration. And appointing special prosecutors is fine, and I'm sure Democrats will talk about how they have appropriated more money for inspectors generals, but quite frankly, that's like slamming the door on the barn after the horse is already gone. The fact is the money is already gone. You might get little back, but for all intents and purposes, the money is gone. There may have been funding for fraud prevention in the American Rescue Plan and the Omnibus, but the question is, how were those funds used? How will it be used? This is basic oversight. This is our responsibility, and so far as I can tell, there has been no real oversight, nor is there any real oversight on the horizon. Again, I would like to thank Chairman Conley for at least pulling together a conversation on this topic. And I'm sure you're under certain constraints as to who you can call as witnesses, but I believe there's one thing that will be clear today is the tension between fraud prevention and getting money to the recipients as easily and quickly as possible. During the initial steps and stages of the pandemic, when we were all facing unprecedented action that was needed to keep the economy afloat, look, it's understandable in that type of circumstance that we would have erred on the side of getting aid out. But as we will hear today, it does not have to be an either-or choice. There are actions that states could have taken, but they didn't. Why not? We need to know. If we're talking about federal dollars, how much do states even care about program integrity, especially if nobody's holding them accountable? There were certain things that federal agencies could have done, but they didn't. Why not? Was it a question of focus? Was it a question of resources? Was it a question of leadership? Congress first attempted to address improper payments some 20 years ago at least, but those solutions obviously are not working today. The pandemic laid bare the sorry state of fraud prevention and program integrity at all levels of our government. And to be very honest, this is true of Democratic administrations, and it's also true of Republican administrations. But something has to change. Since I came to Congress, I've been amazed at how a simple recitation of a problem is construed as insightful or is construed as in itself problem solving. But it's not enough just to talk about a problem. We've got to take action. And the reality is that agencies don't share data. Agencies don't have access to data in many instances. And you can't do things across the whole of government. There are no incentives. We could go on and on and on and on with the problems that are out there, but frankly, it's just admitting defeat. We have literally swung wide the door of our Treasury and invited our enemies to come in and help themselves. And if we're not willing to fix the problem now, I fear that we will never be ready to fix and address the problem. And frankly, this is not an issue to slip in halfway through the State of the Union. This is a disgrace. It's an emergency. It is something that demands attention now. And Chairman, we do hearings twice a year on FTARA. That's fine. But this is an issue that needs to be highlighted twice a year. And we have got to do something about this problem. I look forward to hearing from our witnesses today. I appreciate each of you for being here, but I really look forward to demanding answers from the administration and demanding action. And with that, Mr. Chairman, I yield back.
I thank you, gentlemen. Let me now introduce our witnesses. Our first witness today is Linda Miller, Principal of Advisory Services at Grant Thornton. Formerly, Ms. Miller served as Deputy Executive Director of the Pandemic Response Accountability Committee and as Assistant Director of the Government Accountability Office, where she worked over 10 years and specialized in fraud risks and program integrity. Next, we'll hear from Scott Jensen, Chief Executive Officer of Research Improving People's Lives, a nonprofit that works with governments to help them use data, science, and technology to improve policy delivery. Formerly, Mr. Jensen served as the Director of Rhode Island's Department of Labor and Training. Then we'll hear from Adrienne Harrow, Chief Executive Officer of the Workers Lab. Where is Adrienne? I guess you're on virtually. Are you, Adrienne? Yeah, there you are. Okay. That invests in new ideas for the modern worker, and Adrienne prefers to be addressed by his first name, Adrian. Then we will hear from Rachel Gressler, Senior Research Fellow in Economics, Budgets, and Entitlements at the Heritage Foundation. And finally, we'll hear from Parker Gilkison, Senior Policy Analyst in the Income and Works Supports at the Center for Law and Social Policy. So if you, Adrian, could unmute yourself and raise your right hand, if you all would rise and raise your right hand to be sworn in. Do you swear or affirm that the testimony you're about to give is the truth, the whole truth, and nothing but the truth, so help you God? Thank you. Let the record show the witnesses all answered in the affirmative. Without objection, your written statements will be entered into the record in full. With that, Ms. Miller, you're now recognized for your 5 minutes of summary testimony. Welcome.
Thank you, Chairman Connolly and Ranking Member Heiss and esteemed members of the committee. It's a pleasure to be with you this morning. I'm a principal at Grant Thornton, where I lead our fraud and financial crimes practice. But as Chairman Connolly mentioned, today I'm going to discuss my experience both as an executive at GAO as well as my time spent being the Deputy Executive Director of the PRAC. Much has been written about the unprecedented fraud that occurred during the pandemic. I've spent almost 20 years in the anti-fraud space, and there's no question that this was the largest fraud event in our nation's history. It comes as no surprise, though, to those of us who've been working in the anti-fraud industry. We live in the age of the data breach, where criminals now have data on literally every American citizen. And today's fraud actors are a sophisticated adversary. They take data purchased on the dark web, often for less than $1 a piece, and they apply advanced tools and techniques, automated bots, artificial intelligence, and sophisticated counterfeiting tools, deep fake technology, they've honed their craft. And how do federal and state agencies fight this adversary? With very limited data, with rudimentary analytics, with IT systems that run on software developed in the 1960s, with next to no leadership commitment. If the pandemic fraud alarmed people, that's simply because they haven't been paying attention. The fleecing that we saw was the direct result of years of inattention from senior leadership on the need for proactive fraud risk management. 3 key areas must urgently be addressed. The first is data. By and large, agencies are struggling to effectively use data to fight fraud and improper payments. Even the most basic use of data, data matching, is not being done widely. California paid $810 million in pandemic unemployment benefits to 45,000 prisoners because they hadn't developed the capacity to match prisoner data with their claims data. And 11 years after Treasury created the Do Not Pay system, today, in 2022, that system still lacks the Social Security Administration's full death data or prisoner data. Let that sink in. The fraudsters have detailed information about you: your address, your date of birth, Social Security numbers, the passwords to your most sensitive accounts, and Treasury cannot even access data to find out if an applicant is alive. Our adversaries are using our own data against us. Those who say we must choose between fraud prevention and privacy are creating a false dichotomy. We have the technology to do both, but agencies need the will to make fraud prevention on par with privacy protection. The second area is leadership priority, which I'm afraid to say is woefully lacking in this area. Agency leaders have few, if any, real incentives to prioritize integrity over the delivery of benefits. It makes sense, because they only get an angry call from a citizen if a benefit has not been paid. Nobody calls to talk about fraud. When I was at GAO, agency officials directed us to the OIG when we wanted to talk about fraud risk management. They simply did not see fraud prevention as their responsibility. The third area is technology, where government badly lags its private sector peers. The banking sector's been using tools like Know Your Customer that pull real-time, updated information instantly on applicants and customers, and these tools have been in place for years. What we saw during the pandemic was an almost total removal of the guardrails. We asked people if they were eligible for a benefit, and when they said yes, we gave it to them. Congress and the administration made the calculated decision that the need justified the profound risk. But make no mistake, there was fraud and improper payments before the pandemic, and there will be even more fraud and improper payments after the pandemic if action is not taken. The current approach is simply not working. There have been 5 iterations of legislation focused on improper payments over the last 20 years, and during that time, the improper payment rate has steadily risen. As currently written, the Payment Integrity and Information Act creates burdensome compliance requirements while doing little to address the root cause of the problem. Most improper payments are caused by a lack of data verification, yet when we ask agencies to do check-the-box compliance, we fail to ask them to address the root cause of the problem. First and foremost, agency leadership needs to prioritize integrity of the funds they disperse almost as much as they prioritize getting those funds out the door. This imbalance must be addressed. And agencies need to proactively address the root causes of the problem, not with more burdensome compliance activities, but by using data and analytics that verifies the identity and eligibility of an applicant, technology like device fingerprinting and threat intelligence from deep and dark web sources, and other tools. These are complex problems, and there are no easy answers. Therefore, a dedicated anti-fraud office must be created to work on these issues solely. The United Kingdom established such an office in 2018 and has seen great success. Fraud is not going away with the end of the pandemic. Indeed, these fraud actors are only emboldened, and they will continue to target these ill-prepared agencies. The time for action is now. Thank you.
Thank you, Ms. Miller. Mr. Jensen, you are now recognized for your 5-minute opening statement.
Thank you, Mr. Chairman and members of the committee. It's an honor to be here. My name's Scott Jensen. I'm the CEO of Research Improving People's Lives. But I think I'm here today really to talk about my experience as the Rhode Island Director of Labor and Training during the pandemic, leading the unemployment insurance effort there. In terms of leadership, that's all we did for 2 years. As the director, I led it right from the front, and I learned a lot. And I wanted to share just a couple of things to add some color to the great ideas that I've heard today. To begin with, it is not an either fraud or paying folks. It has to be a both and. And the one thing about my experience in Rhode Island's pandemic was it was, I think, the hardest C- I've ever earned in my life. That was a very, very difficult time, and none of these programs were going to make it through in one piece, just because of the massive scale of what we had to do during the pandemic. 5,000 people, it was the biggest week Rhode Island had ever had in unemployment insurance, and we were doing that every day for months. 5,000 new people, 5,000 new people. So the central challenge that I think we faced that allowed us to get a C- and make it through the pandemic and give decent service, but also do a fairly decent job with fraud, was that we used UI data, the data that the UI program itself generates, in order to improve the administration of the program. And let me try to explain that a little bit with some specificity. So the first thing, when we talk about technology and the old technology that UI programs are faced with, is absolutely true, of course. But new technology is a necessary but not sufficient condition to get to solve the problems that we're looking at. You can't just buy an off-the-shelf new computer, put it in, and this problem is going to go away. So let me give you some context about how UI works and how we might do this. First off, there are 3 steps to unemployment insurance. Very simple. 1, get information from somebody so you can figure out whether they're eligible or they're not eligible. 2, make a judgment. Use that information to make a judgment about the benefit. And 3, either pay it or don't pay it. And while those 3 things seem rather straightforward, they're hard. And in some instances, it's very difficult, and there's tough cases, and you need a real expert to take a look at that. And in other cases, it's pretty straightforward, a straightforward yes or no. What we faced in Rhode Island and everywhere else was that effort. When you're relying on people to make judgments like that, it doesn't scale. So you have a lot of new claimants coming in, and you can't hire quick enough to train folks quick enough to get them to be able to keep up with the volume. So then you begin to get swamped, and that's what in all of your states, I'm sure you have a lot of experience with swamped UI programs. So what we tried to do, and it was a little naive, and what we tried to attack both fraud and deal with paying quickly. With fraud, when somebody comes to apply for unemployment insurance, they leave a footprint in the metadata of your system. And if you can distinguish between the fraudster and the right person by using sophisticated artificial intelligence and other techniques, you can then, it's like probable cause. You can really scrutinize somebody who's presenting as if they're a fraudster, and you can be a little bit more sure that somebody else who's presenting normally, you can get them paid quicker. So that was broadly the strategy on the fraud side. And on the payment side, we were trying very hard to distinguish between a clean claim, which is an obvious yes or no, and a complex claim that is going to require a person to solve it. Data is crucial to do either of those things, and they're both enormous undertaking. If you don't have data, you can't make the difference between either one. And the biggest problem we had during the pandemic, we're one of those states with those old AS400 computer systems from the 1980s. In order to get data out of that thing, you had to code it from scratch. So really, really inefficient way, impossible really to do continuous improvement and change the way you're administering these benefits. So it was clear to...
If you could sum up, Mr. Jensen, 5 minutes.
Yes. The summary is simply, we have to use data better, and we need the technology to do it, but then the further step is continuous improvements so we can achieve the kind of customer service we're all getting used to in the private sector.
Thank you.
Yep.
And I got to admit, the image of a footprint in the metadata system will stick with me.
Good.
Okay, Adrian, you are recognized, Mr. Adrian Harrow, who prefers to be known by his first name, Adrian. Adrian, you're recognized for your 5-minute opening statement. Adrian, you need to unmute yourself. Adrian, we cannot hear you. All right, Adrian, let's try to work that technical problem out, and we will go to our next witness, Ms. Gressler. You're recognized for your 5-minute opening statement. Welcome.
Good morning, and thank you for the opportunity to be here today. We've heard about the recent rise in improper payments, but I wanted to highlight this graph here to help convey the magnitude of that increase. We have here a chart between 2005 and 2021. So on the bottom is GDP growth. That grew 76%, the gray line there. Total program outlays grew by 221%. That's the green line, so those are the government payments. The red line skyrocketed 633%. That's improper payments. So improper payments grew at 8 times the rate of GDP growth. If improper payments had their own budget category, it would have been the federal government's 5th largest expenditure in 2021. Multiple factors have contributed to this rise, including the increased use of online government services, the failure of agencies to utilize sufficient security measures, and the pure enormity of government transfer payments. 3 things are crucial to reducing improper payments. First is to identify that people are who they say they are. Second is to make sure that people are eligible for the benefits they claim. And third is to minimize the number of government programs that individuals have to rely on for their ordinary needs. The pandemic unemployment insurance programs, which will likely go down as the biggest fraud in U.S. history, provide some important lessons. In March of 2020, Congress passed a massive expansion in state unemployment benefit programs, and it was supposed to last for only 4.5 months, but instead lasted for 18. These programs were highly problematic. The $600 bonus payments on top of existing state payments created a high-value target for fraud. Benefits were extended to people who weren't part of the unemployment system and for whom it was nearly impossible to verify their eligibility. And then broad qualifications meant that nearly anybody could come up with a seemingly legitimate claim. These expansions opened the floodgates to woefully outdated and ill-prepared state UI systems, inviting massive fraud and abuse, and allowing international crime rings, even state-sponsored Chinese hackers, to steal Americans' identities and taxpayers' money. I estimate that the pandemic unemployment benefits likely exceeded a 40% improper payment rate. That's based on the data that shows that we paid out 1.365 billion unemployment checks. But had we simply paid out 100% of people who were actually unemployed, that would have only required 807 million checks. So what that means is those excess checks amounted to $357 billion of taxpayers' money that went above and beyond actually covering every single person who was unemployed. That's a $2,700 cost per household in the US just for the pandemic unemployment fraud. Unfortunately, there are many other government programs that regularly impose massive improper payment bills on Americans. The Earned Income Tax Credit, Medicaid, and CHIP all have improper payment rates between 22% and 32%. And there's a whole total of $123 billion in improper payments in those three programs alone. So what should be done? For starters, government programs should be required to follow security measures similar to the NIST standards. For example, Arizona had a time when it was receiving more unemployment insurance claims than it had people in its entire workforce. But after it partnered with a NIST-certified provider, its claims fell by 99%. There is a 2019 OMB memo that requires federal agencies to utilize these standards, but most aren't doing it. Next, the federal government should optimize secure information sharing across government agencies through its Do Not Pay database. Lawmakers also need to improve eligibility verification and maintain a competitive market for cybersecurity so that taxpayers can benefit from the most responsive and innovative systems out there. Perhaps most important, however, is the need to limit the size and the scope of government programs. In 2022, the US will spend $3.9 trillion in transfer payments. That's 4 out of every 5 tax dollars that we'll collect. Constantly expanding entitlement programs without any consideration of what they'll cost is unsustainable. And taking people's money and requiring them to jump through bureaucratic hoops to get some of it back from proposed programs like government-directed childcare, government-determined paid family leave, or purchasing government-approved electric vehicles is inefficient, and it will leave people with lower incomes and less control over their lives. A few steps to reduce the federal government's tax and transfer footprint and empower people instead of bureaucrats include eliminating tax credits in favor of lowering overall tax rates, enacting universal savings accounts to make savings simpler and more affordable, rejecting new entitlement programs, and reforming existing ones. Thank you.
Thank you very much, and you had time to spare. Great job. Have we solved the problem with Adrian? Have we solved the problem? Thank you. Ms. Gilkison, you're recognized for your 5-minute opening statement.
Good morning, Chairman Connolly, Ranking Member Heiss, and distinguished members of this committee. Thank you for inviting me today. My name is Parker Gilkison, and I am a senior policy analyst at the Center for Law and Social Policy. My experience as a North Carolina caseworker led to my commitment to become a researcher, advocate, and expert on SNAP, TANF, and Medicaid. CLASP is a national, nonpartisan, anti-poverty nonprofit advancing policy solutions for people with low incomes. My testimony summarizes a detailed paper I published analyzing the racialized history of fraud in SNAP. I'd like to make 4 key points. 1, the intense focus on fraud in SNAP is tied closely to a history of racist stereotypes. 2, actual SNAP fraud is rare. 3, the focus on fraud makes programs less effective at reducing hunger. And 4, federal and state agencies have many practical fixes to reduce the barriers to SNAP caused by unnecessary fraud provisions. Healthcare, food, secure housing, and a livable wage are basic human needs. And seeking the help you need to succeed is a statement of human dignity and justice. However, coded language, dog whistling, and racist stereotypes have reinforced the lie that folks receiving public benefits are exaggerating how poor they are and are likely committing fraud. The perception of fraudulence based on poverty and race has a long history here. Anti-Black images born out of slavery label Black people as biologically inferior, inherently lazy, promiscuous, and untrustworthy. These harmful tropes were used to justify the forced labor of Black people and are still reflected in many U.S. policies today. In the last 50 years, policymakers have used tropes like the welfare queen to insinuate that people experiencing poverty, especially Black people, are fraudulent and must be forced to work. Legislators have used this dog whistle to justify benefit cuts and while increasing spending to protect program integrity. Even those promoting expansions for public benefits have reinforced stereotypes by emphasizing how these programs would only benefit the so-called deserving poor. Fraud is quite rare, contrary to media portrayals. Yet, despite that rarity, federal and state legislators prioritize fraud prevention with millions in grants and targeted funding for program integrity. States even have tip lines for the public to report suspected fraud, although most reports are based on personal vendettas or a belief that a person using SNAP is too nicely dressed to qualify for benefits. Also, due to complex SNAP rules, many honest mistakes get lumped in with fraud because recipients often misunderstand reporting rules. Eligibility workers are often better trained to look for fraud than to provide trauma-informed care or refer families to other necessary assistance based on the many challenges of living in poverty. This isn't surprising, as federal rules penalize states for any benefits granted in error, but not for failing to help people in need. Also, difficult and time-consuming applications meant to catch people attempting to commit fraud often present barriers to applicants and caseworkers, reducing access and increasing stigma and shame. Of course, no program can survive if it doesn't take abuses seriously. However, when actions taken to improve program integrity have a strong negative and racially skewed impact that decreases access to basic life necessities, policymakers have a moral obligation to find less harmful ways to fight fraud. They also must repair the harm of these actions on innocent recipients' dignity and trust in government. Recipients accused of fraud are often considered guilty until proven innocent. While they're supposed to be able to defend themselves in a hearing, they aren't entitled to representation. And some states have coerced people into signing their rights by threatening criminal prosecution. Historically, anti-hunger advocates have been afraid to criticize the negative consequences of the focus on program integrity and its disproportionate impact on people of color for fear of being accused of defending fraud or legitimizing racist tropes. However, we must discuss and address fraud, program integrity, and the over-policing of people experiencing poverty to achieve policies that reflect equity, trust, and truth, instead of mistrust, mistreatment, and systemic oppression. Here are just a few of the equitable solutions state and federal policymakers should try. Simplifying SNAP rules so clients understand what changes to their income need to be reported, especially for the growing share of workers in the gig economy. Many improper payments are caused by confusion and honest mistakes. Rethinking quality control so we measure timeliness and accuracy while also reaching all eligible households and ensuring customer service satisfaction. Providing oversight and accountability to states for incorrect determinations of fraud, sanctions, and overpayments, as well as for violations of recipients' right to due process. For more detailed research, I would like my report to be officially submitted into the congressional record. Thank you, and I look forward to your questions.
Without objection, so ordered. Perfect timing. You had 1 second left. Thank you, Ms. Gilkinson. Adrian, are you ready now?
I believe I am, Chairman.
Yes.
Can you hear me?
You got it. You're recognized for your 5-minute opening statement.
Okay, terrific. Good morning, Chairman Connolly, Ranking Member Heiss, and all members of this subcommittee on government operations. My name is Adrian Haro, and I'm the Chief Executive Officer of an organization called the Workers Lab. Thank you for the opportunity to share how our work is contributing to the important enterprise of tackling improper payments. So many of the ways that we serve and take care of workers in this country are outdated and exclusive. So we need new ideas about how to better serve more and every kind of worker in this country. That's why at the Workers Lab, we are on a mission to give new ideas for and with workers a chance to succeed. Over the last year, one of those ideas has been about how automating the process of verifying income in the administration of unemployment benefits could both increase the efficiency of the system and make it more equitable and accessible for non-traditional gig and contract workers that have historically been excluded. And what we're learning is that automating income verification in the administration of unemployment benefits can be a win-win. A win for gig workers in that it can make the process of applying for unemployment benefits faster and more user-friendly, and a win for government in that it can increase the efficiency of the process and allow for better service delivery to its constituents. Our learning journey started at the beginning of the pandemic when, for the first time ever, gig workers were made eligible for unemployment benefits. A tremendous and novel achievement, but one that presented many administrative challenges for states all across the country. An estimated 57.3 million Americans generate income from gig work, which represents 35% of the US workforce and is expected to grow to 50% by 2025. One of the biggest challenges for states was how to make sense of and verify income from gig work, which can often be generated from multiple sources at multiple times, sometimes even within the same day. Our unemployment system was simply not designed to verify income that looks like this. So we brought gig workers together with Steady, a platform that helps gig workers track, understand, and optimize their income, to develop what we call an income passport to help fix this problem. At the Workers Lab, we believe deeply in user-centered design and that any innovation for workers should be done in partnership with workers. The income passport automates an otherwise manual process for verifying income and unemployment benefits applications. Rather than relying on the often complex and sprawling paper trail that documents income generated from gig work, it instead pulls that income data directly from trusted financial sources. We tested the income passport with hundreds of workers in Alabama and Louisiana to demonstrate that automating income verification can make the process of administering unemployment benefits easier and more efficient for government staff and gig workers. Here's what we're learning about how automating the process of verifying income can help mitigate improper payments. First, the income passport reduces the potential for fraud. Because the solution safely and securely pulls income data directly from trusted sources and then transmits that income data directly to the state, it leaves very little room for fraudulent activity. Initial findings show that of applicants that chose not to use the passport, 90% of them were likely bad actors. Second, the income passport increases accuracy in the determination of benefit amounts. For the state, in that it has access to a trusted and tailored record of income generated from gig work, and for gig workers in that they have unprecedented access to see past income from multiple sources and thus more control over how their income is reported. Third, the income passport optimizes efficiency. For states, in that it automates an otherwise manual process, reducing the potential for human error, reducing processing time from as much as half an hour to 1 to 2 minutes, and allowing for benefits payouts in less than 24 hours. And for workers, in that it simplifies the daunting task of organizing income from gig work, thus enhancing the quality of the data submitted to the state. Finally, and perhaps most importantly, we're learning that the income passport holds promise beyond temporary pandemic assistance programs to automate the verification of income from gig work across the entire menu of public benefits programs in states all around the country. The federal government can do 3 things to help states make this happen. First, it should use its resources to evaluate potential technology solutions and support states that want to test them, providing funding and advice so that states can take advantage of innovation. Second, it can also establish policy guidelines and requirements across federal agencies that incentivize states to adopt more innovative, worker-centered technologies. And third, it can share best practices and successful technologies across states and help solutions be adopted at scale through funding and other incentives. And of course, the Workers Lab stands ready and willing to help. Thank you again for this opportunity, and I look forward to your questions.
Wow, you had 5 seconds left. Great job, Adrian. Thank you. We now enter into member questioning. Chair recognizes the distinguished Congresswoman from the District of Columbia, Eleanor Holmes Norton, for her 5 minutes of questioning. Welcome, Eleanor.
I appreciate the chair, my good friend from Maryland, my next door neighbor, recognizing me. We've been thinking about improper payments all wrong. If solving the problem of improper payment means ensuring that government benefits like Social Security and Medicare, military pay reach those who Congress intended, perhaps we should focus more on those who cannot even access these benefits. Let me use a couple of examples. Nehal from Mount Hall, New Jersey was a victim of fraud and could not access unemployment insurance for 7 months because the system locked him out. Rafavo from Paris, Tennessee, a 45-year-old retail worker who worked in both New Jersey and Tennessee, got laid off in July 2020. He is still waiting for the state of Tennessee to send the state of New Jersey information on his earnings so he can access benefits he qualifies for. Mr. Jensen, you have seen firsthand cases where incorrectly checked boxes language barriers, agency processes and operations, confusing program applications prevented an individual from accessing a benefit. In your experience, who are the individuals and families most hurt by Byzantine applications or other barriers to program access?
Thanks for the question. I think that in the pandemic, one thing that we saw was so many people hurt across the board. Folks who couldn't use technology well, folks who weren't familiar with the Byzantine structures that you're describing, because they are Byzantine. But we do have to, as a number of folks have said here on this panel, focus on user-centered design when we're designing these programs, because our mission has to be right down the middle. We have to make it easy and straightforward to get access to benefits when you are deserving of them, when you qualify for them, and keep others who aren't qualifying from being paid. And that really requires a lot more thinking about how we're going to make sure that folks who, just because they were confused by the technology, just because they were defrauded and had to wait for months and months for benefits, it's not acceptable.
Ms. Miller, does the federal government even know how many people are eligible for benefits and cannot access them?
No, the government has not undertaken any effort to try to estimate how many people would need to access benefits. That would be a very difficult calculation, I think, for the government to even try to undertake.
I guess it would be. Adrian, in your testimony, you stated that your projects create a win-win for workers and the government. Can you talk a bit more about what you mean by win-win?
Absolutely. Thank you for the question. I guess I mean that what we've demonstrated in this project is that you can actually do both, right? Increase access to public benefits, and at the same time also increase efficiency inside government simultaneously. Like it's been said before today, it's a false trade-off to say that you have to sacrifice efficiency to increase access. I believe that doing so can stifle innovation in the public sector, and we should be doing everything we can to encourage it.
Thank you very much. I yield back.
Thank you. Thank you, Ms. Norton. Mr. Heiss, you're recognized for your 5 minutes of questioning.
Thank you, Mr. Chairman. Ms. Gressler, let me start with you, and it may be kind of a loaded question because there's a lot to answer within this, but it's no secret the rampant fraud that came about through the pandemic programs, but also unemployment insurance, Medicaid, and a host of other things. Are there any actions that the federal government could be taking that they just simply are not?
Yes, I think there are definitely standards out there that exist that say what are the right steps that programs should be taking. They're simply not using them. I mean, they've been directed to do this, and yet they're not. And I think this comes down to an accountability problem, because at the end of the day, if there's no consequence for not reducing your improper payments or staying within a limit, then the programs are not going to take them. I mean, in the UI payments, there were multiple problems there, and certainly the federal government put mandates on the states that they weren't capable of enforcing those identity checks and those eligibility checks. Looking to going forward with UI, I think it would be very problematic to open this up to a group of workers who you really can't make those proper eligibility checks there. For those who don't have an employer, there's no verification in the process. Okay, so they've been directed to take certain steps, but they have not, and there's no accountability. Why? Well, and this gets to the nature of government programs. A lot of that $3.9 trillion is entitlement programs. The money is essentially there no matter what. It doesn't matter how many claims are made and improper payments come out of the door. there's unlimited access to taxpayer money, even if it's deficit finance. You know, if you tell me I need to lock my door so that my money and my things don't get stolen, but I don't lock it, and somebody comes in and robs me, but by the time I get back, all my money and my things have been replaced, I'm not going to lock my door in the future. And so we need to have accountability in place. The standards exist, but if nothing happens when the programs don't meet those standards, we're not going to get to a better solution here.
This is so infuriating to hear this kind of stuff. What needs to happen for our agencies to care? I mean, what is behind the lack of attention being directed towards fraud?
It's the lack of accountability. You know, you here in Congress are not in charge of micromanaging those agencies. You know, administrations are the ones that are in charge of running the programs, and they're not taking the measures they should. But what could you do? As Congress, you have the power of the purse. And so I would recommend that there need to be some limits placed on there, whether it's setting a pathway towards reducing improper payments and actually having penalties that happen if they don't achieve those standards.
Would
Because
the
unless
gentleman—
there's a consequence.
I'm sorry.
Go ahead.
Yes, I'll yield. Sure.
If the gentleman would yield without penalty, if we could freeze his time, just for a second. I'm also infuriated when I think about it, as Mr. Heiss says. Ms. Miller suggested that one of the problems we face is that managers don't see it as their responsibility. That's someone else's problem. So I don't have to worry about improper payments, whether it be fraud or just mistakes. That goes to the IG or somebody else. Mm-hmm. Is that, from your point of view, a big part of the problem, or at least part of the problem? And is that corrected somehow by our building in evaluation criteria so that, no, it is your problem, it isn't just someone else's problem? If the gentleman would allow me, because I think this is consistent with where you're headed too. Thank you. Thank you for yielding.
Yeah, I mean, at the end of the day, if whoever is in charge of that agency knows that there are going to be consequences, perhaps it's their job, perhaps it's a reduction in funding, and then they can't actually perform the service that they are supposed to do, then they're going to do more to reduce those improper payments. And it's unique across every program. It's not to say that there is one set of rules that should apply holistically, because Medicaid is different than SNAP benefits, than the EITC, or than UI. And those agencies and programs need to have the flexibility to determine what are the right steps that they need to take. They have different eligibility criteria. They have different people they're serving. They have different ways of making the payments. So that flexibility still needs to be there, but it's the accountability that's missing.
Thank you, Mr. Chairman. And listen, accountability starts right here in this committee, Mr. Chairman. We have got to do our business of oversight and hold accountable these agencies that are not doing their job to protect the American tax dollars. This is inexcusable to me. Ms. Miller, let me just ask your opinion. Is there anything you would add to this in terms of what are some of the obstacles that are keeping our agencies from protecting funds and preventing fraud?
Yeah, look, I think people respond to whatever they're being measured on, right? And so most federal agency leaders see themselves as their job is delivering the benefits. When you ask someone, what is my mission in this agency? It's delivering benefits, getting benefits out the door. If you ask them, is my mission to ensure that only eligible beneficiaries get it? They don't see that as much as their mission. They see it as, sure, of course, if necessary. But if you're incentivizing people to adjudicate a certain number of applications in a given period of time, they aren't incentivized to slow down and look and see if this application looks like fraud and go check some things, because at the end of the day, it's the number of applications that they approved. So we have to change the incentive structure from the top all the way down.
Absolutely. Okay, so let me just, while you were at PRAC, did you see, was there anything, any steps from federal agencies that moved in the direction of preventing fraud, abuse?
Yeah, the Small Business Administration, when they went into the second round of PPP funding, they started employing some know your customer tools that the banks employ, and that did help with identity theft. I think that Ms. Grenzler's right. The identity theft was the biggest fraud issue in the pandemic, And so identify, know your customer, the concept that banks use, is an effective tool to identify whether someone is who they say they are. Identity theft is a growing problem in fraud, but I want to make sure that we are clear that the pandemic fraud is in the past, and we can talk about all of the problems that happened, but really we're looking forward. How are agencies going to solve these problems going forward? They're going to have to take a much more proactive approach using data.
Well, it's not in the past to ignore it. We can't go down that path. But thank you, Mr. Chairman. I yield back.
I thank the chair. I thank the gentleman, and promise let's find some common ground to look at metrics that actually incorporate responsibility and accountability for improper payments across the board, so that managers have an incentive to pay attention to this, because right now they don't have much, as the data would show. I thank the gentleman. The gentleman from Illinois, Mr. Davis, is recognized for his 5 minutes of questioning.
Thank you, Mr. Chairman, and I also want to thank all of the witnesses for their informative testimony. During this year's State of the Union address, President Biden announced his plan to appoint a chief prosecutor to focus on the most egregious forms of pandemic fraud by criminal syndicates. The White House published an estimate that between fiscal year 2020 and fiscal year 2021, the government-wide improper payment rate rose from 5.6% to 7.2%. Clearly addressing fraud then is important. Ms. Miller, let me ask you, what steps can federal managers take to achieve a more strategic, risk-based approach to managing fraud and developing effective anti-fraud controls?
Sure. Well, there is a framework. GAO put the framework out in 2015. It's called the Framework for Managing Fraud Risks in Federal Programs. And it outlines steps for taking a proactive, strategic approach to managing fraud risks. If agencies had done these kinds of activities prior to the pandemic, they would have recognized that things like not collecting device identity information, IP addresses, was going to create significant fraud issues during a large event like the pandemic. Fraud risk management needs to be proactive, it needs to be at the management level, and it needs to be in a strategic, not after the fact, recovery focused, which is where we are now in the pay and chase mode. I also want to be a little provocative here and suggest that we might consider combining improper payments and fraud for the purposes of agencies' implementation, because they see these as two unfunded mandates and they don't take either of them seriously. They take a very compliance orientation to both. And if we were to reduce the separate and burdensome compliance activities around improper payments and fraud, combine them and require them to be more strategic, proactive, and outcome-oriented, I think we could see a lot more progress.
Well, thank you very much. Program integrity means more than just preventing fraud. It also means getting money to everyone Congress intended. Ms. Gilkison, what happens to life-saving federal programs and the individuals and families who rely on them when policymakers focus solely on reducing fraud by adding to application and eligibility review processes?
Thank you so much for that question. When there's a focus on fraud, it causes unnecessary burdens on both clients and caseworkers, and particularly in terms of public benefits, like SNAP, TANF, and Medicaid. Instead of spending time catering to the needs of their customers, caseworkers have to be hypervigilant about finding any fraud or risk losing their jobs. For example, I used to be a caseworker for the state of North Carolina, and one thing that I do know is that quality control measures do exist, and states are held really tightly to that and are often held accountable to pay if they aren't held to that. But some of those quality control measures don't allow for people to be able to get their jobs done effectively. And one thing that I would say is that public benefit recipients have to endure over-policing, privacy invasions, difficult and time-consuming applications, unnecessary verifications, all to prove that they aren't committing fraud. And this burden causes errors and burdens to access. Thank you.
Well, thank you very much. And let me just say that I think we surely need to spend as much time, energy, and effort on the big guys as we do the small guys. And much more needs to be done. Thank you both, and I yield back.
If the gentleman would yield to me for a minute, let me just say I agree with you completely. We need to be looking at every level of improper payment. It's not just fraud. But Ms. Gilkerson, I would just say, and I think you would agree, there's an opportunity cost, however, when mistakes are made or fraud occurs. So if I have $100 for a good program and 20 of it is siphoned off improperly, whatever category, that's $20 I'm not providing to the people who need it. And so it seems to me that, you know, every effort we can make to try to make sure that the integrity of the program is preserved so that the benefits are flowing to those who need it and are eligible for it is a good public policy goal. And I'm sure you agree with that.
Thank you, Mr. Chairman, and I agree wholeheartedly.
Thank you, Mr. Davis. Yes, ma'am.
Yes, I definitely agree with that. And I want to make sure that we're understanding that having streamlined access for people to actually be able to have access to the programs is super important. And I love all of the technology fixes that a lot of my co-chairs, testimonials here are mentioning, because it really is important to streamline access and make sure that people actually have the ability to get access, because there are so many barriers with applications, with verifications, that folks just, some of them walk away and say they're not even going to try to go through with it. And we want to make sure that all of the technology put in place is something that's encouraging people who are eligible to apply.
Yep. Thank you. I think that's an important point. Gentleman from Pennsylvania, Mr. Keller, is recognized for his 5 minutes of questioning.
Thank you, Mr. Chairman, and thank you to Ranking Member Heiss and all our witnesses for being here at today's hearing. Improper payments continue to be an area of concern in the federal government. According to the GAO, improper payments have been estimated to cost $1.7 trillion government-wide from 2003 through fiscal year 2019. These improper payments were concentrated in 3 program areas: Medicaid, Medicare, and the Earned Income Tax Credit. As spending for Medicaid and Medicare continues to increase, it is crucial that these funds are properly managed and distributed, because, as it was mentioned, improper payments take benefits away from people who are truly in need. According to the Centers for Medicaid and Medicare Services, in fiscal year 2019, Medicaid made $57 billion in improper payments. This amount rose to $87 billion in fiscal year 2020, meaning more than 1 out of every 5 payments under the Medicaid program was improper. I think we all agree it's unacceptable that any funds are going to ineligible recipients or made in incorrect amounts. We need more accountability and oversight of the outlay funds so we can ensure we are using taxpayer dollars appropriately. Reducing these improper payments is crucial to protecting federal programs that serve Americans. So we take a look at all the things that have happened, and I guess I would just look at, have we seen, and I'll just ask Ms. Gressler, have we seen payments increase over the years, or have we seen the scorecard getting any better with improper payments?
No, we've seen kind of a double whammy, because both the number of payments that are going out are increasing, and also the rate of improper payments are also increasing there. And so that's why we've seen 633% growth in the number of improper payments, just since 2005. And
I noticed that, and this actually was happening prior to the pandemic.
Yes, the UI was specific to the pandemic because just the size and scope of it, but all these other improper payments were already increasing prior to.
So had we put in place plans prior to the pandemic, we wouldn't have seen so much trouble through the pandemic in getting payments made properly.
Correct.
Okay. And that, I guess, is the point. We have these government agencies that are responsible to make payments. So the people, are the same people running these programs, or the same people that run these programs responsible for making the accurate payments? Are they the same people that have been in charge of them for many years?
I think that the problem is that the people who are in charge of the programs, their mission, as Ms. Miller pointed out, is getting the payments out the door. And I see that problem back in two ways.
I would disagree with that. Getting the payments out the door accurately is the mission.
It should be.
Because, let me ask you a question. If you had an accountant that you were running a business and they were making improper payments, their mission is to get the payment out the door, right? But if your accountant isn't doing their job properly, would you continue to hire them and employ them?
And that's exactly the point here, is that we don't have the accountability. There's no consequence when improper payments are.
Well, it goes back to my point. Is it the same people in these government agencies that have been overseeing these payments for years? At the head of the agencies? I mean, I guess I'm just going to...
Yeah, I mean, they change with administrations, but the same ones are in there.
Yeah, and what needs to happen is some of them need to lose their jobs because they're not doing them properly. I mean, government is the only entity where we do less with more, right? And we reward bad behavior. I mean, I guess I would just look at that. Even with unemployment insurance, I'm sure states have had issues. I know Pennsylvania's had issues. I toured Pennsylvania's unemployment division in the Department of Labor when I was a state rep. And I looked at the inefficiencies there at that point in time. And I think, would it be safe to say that some of the payments are made improperly because we hand the money over to the states and then the states don't make sure that...
That was a big problem with the pandemic unemployment insurance benefits, is that it was federal money and there was no consequence to just simply approving those claims because they were paying the $600 and they were paying the ordinary benefit. And so even if you thought, well, hey, maybe some of this money is going to get spent in my economy in a good way, as opposed to going to criminal enterprises overseas, the incentive that was there to utilize those and to send the payments out the door.
So would it make sense that when we give money to states, if the state doesn't have, isn't able to distribute that money effectively, they shouldn't get the dollars?
Exactly. There have to be requirements there that if you are getting this federal money, you're going to be protecting federal taxpayers through that.
I mean, because we can talk about putting all this money out, but ultimately our kids and grandkids are going to be the ones paying it back because we're borrowing it. So I think it should be imperative on all of us, or a priority of all of us, to make sure it gets done effectively. So I'm out of time. Thank you, Mr. Chairman.
Thank you. The gentleman from Maryland, Mr. Raskin, is recognized for his 5 minutes.
Mr. Chairman, thanks so much. You know, many of our federal programs and benefit systems have not been updated to serve the needs of the contemporary economy and workforce. Consider how different our service economy and workforce are today compared to just 10 or 15 years ago. Many workers are in the gig economy now, like Uber drivers, graphic designers, freelance writers, web developers. The Fed estimated that nearly a third of adults engage in gig economy work. Ms. Miller, let me ask you, are current federal laws and benefit structures conducive to serving this population of today's workers?
I don't believe they are. I mean, this is a very new area that we're moving into, where we've got lots more people working remotely and gig workers. And I mean, the systems that are in place now aren't even really set up all that well to work for their traditional systems. So no, I think we have a ways to go to adapt to this new workforce. And I don't think we're even close to where we need to be.
Well, so Secretary Jensen, it's good to see you. I assume that gig workers in Rhode Island benefited from some of the big improvements to state programs that took place under your leadership. How did you work within existing state laws or change state laws in order to design better systems to make it easier for people to access while also preserving the integrity of the programs?
Thanks for the question. What we did with the pandemic unemployment assistance verification was we did a data sharing agreement with the state income tax department and used cloud computing to check to make sure that gig workers, when they applied for PUA benefits, that their gross income was accurate. And if they were accurate, we were able to pay that person quickly. And if they weren't, that person had to go through a much more arduous process, which we were taking very seriously, because fraud is something that I think my colleagues definitely cared about, and so did I during the pandemic.
So, Ms. Gilkison, can you tell us briefly what are the first steps Congress should take now to renovate our laws to make them more applicable to the real economic situation of workers, families, and businesses?
Thank you, Congressman. It is important for Congress to think about people who are benefiting from these programs. So many of them experiencing the worst moment of their lives, seeking help because of sickness, a job loss, fleeing domestic violence, and so much more. They deserve to be treated with respect and dignity, and they deserve to be defined by who they are, not by stereotypes or false media betrayals. And lastly, they deserve to have a seat at the table, not just to share their stories, but to share with you all policy changes that they know would help to serve them and their families. So it's also important to keep in mind how essential these programs are to people's livelihoods. They help to bring so many people out of poverty, and really are programs that are helpful to people when they're going through some of the worst moments in their lives. So I think that Congress should consider really working along with their constituents to hear their thoughts and their thoughts on how they're being treated at the public benefits agencies, and really create policies that are centered in trust and truth and what they believe and deserve is best for them.
Thank you. And Adrian, in your project on helping gig workers receive unemployment benefits, did you see an actual increase in people's access to the benefits? And did you see improper payments go down?
Yes and yes.
And how do you make sure that the projects you're investing in are sustainable and effective in the long term?
It's a great question, Congressman. Thank you. So really quickly, we follow the data. And in the case of gig work and this project, the data show that there will be growth in this part of the economy, right? But we also know that these workers have very little access to public benefits programs because of challenges like verification of their income. So we stood up this project to help, both in the crisis moment, but also over the long haul. And as I mentioned in my testimony, the Income Passport holds promise beyond the temporary pandemic assistance programs, right? To automate income across the entire menu of public benefits. That's everything from SNAP to Medicaid to TANF to CHIP, right? We could take the Medicaid example really quickly and just say, unlike unemployment benefits in which eligibility is tied to work status, and dependent on employers paying in on behalf of workers, and where gig workers do not currently qualify for the most part, Medicaid, on the other hand, is largely dependent on income level, not work status. So all forms of non-traditional income, 1099, self-employment, et cetera, count towards the threshold for eligibility. So we need a better and more efficient way to verify this kind of income in these types of programs so that qualified people are getting the benefits they are legally entitled to. No more, no less.
Thank you.
Well, thank you. Thank you, Mr. Chairman. I yield back.
Thank the gentleman. Gentleman from Arizona, Mr. Biggs, is recognized for his 5 minutes.
Thanks, Mr. Chairman. I'm grateful that you're having this hearing today. I think this is an important topic. Ms. Gressler, is there a focus in our agencies, our executive agencies, on fraud prevention?
I think there's, you know, at a surface level, they will say that they are looking into it, but I don't think that at the core of it they actually are. And I think that the problem there is that they are looking more towards serving customers, towards making sure that they're getting payments out as opposed to protecting the integrity of those payments.
So it's not, there's a superficial level, there's a verbal commitment, but no actual commitment. Ms. Miller, would you agree with that?
Absolutely.
So when I look at this, we currently have more than a $30 trillion national debt, and in 2021 there was more than $280 billion in improper payments. Recent omnibus gave DOJ $35 billion in discretionary funding. The legislative branch received $6 billion. The President requested $773 billion for an agency that's wastes nearly one-third of it, and that's the Department of Defense. And according to the White House's own analysis, between the fiscal year 2020 and 2021, the government-wide improper payment rate rose from 5.6 to 7.2%, and it really skyrocketed UI fraud and improper payments during the pandemic, which I never use that term, but from the 12-month non-pandemic compared to the 12-month normal period. So we look at this and we say that DOJ has brought over 1,000 criminal cases related to pandemic relief programs, totaling over $1 billion, another 1,800 civil cases for an additional $6 billion, and according to the Secret Service, more than $100 billion was illegally obtained from COVID relief programs. So one of the things that you testified to, Ms. Miller, is that we don't have a balance, and that's the point I really want to get to today before I submit things for the record. But this balance of putting money or benefits out the door versus preventing fraud and improper payment. And you've said that there are, since 2015, GAO fraud risks, basically a template. Tell me a bit about that, if you will.
Sure. Yeah, and I'll say that, you know, in the private sector, I have a number of private sector clients, and they would go out of business, as has been mentioned earlier. It's not like you can't do this. It's not as though you can't safeguard taxpayer funding while also effectively getting benefits out the door. It's just a matter of the will to do so. The fraud risk management framework that GAO put out has 4 areas to focus on. The first one, frankly, the one that I would like to focus on the most is commit. That's the very first one. Designate an entity who will be committed to managing fraud risks. If every public sector, or I'm sorry, every private sector company I work for, that I work with as a client, has a dedicated fraud program. They have a fraud office, they have a special investigations unit, someone whose job it is to make sure that their money isn't getting stolen. No agency in any federal agency, aside from the Center for Medicare and Medicaid Services, has such an entity. It's going to be really important to make this on par with getting benefits out the door if we want to see something change.
So when you mention that, implicit in that statement, and something that Ms. Gressler talked about earlier, as well as incentives to find and stop fraud. And there seems to be very little incentive within federal agencies to stop fraud. They are rewarded, and Ms. Gilkison actually testified to this as well. They are rewarded by moving benefits out, but there's nothing that rewards, there's no carrot and stick approach, quite frankly, to stopping improper payments and fraud. I think that this hearing, Mr. Chairman, and I'm glad we're having it, but I think we need to expand this so we can actually get some more specific, concrete evidence. I mean, me trying to get 5 minutes and then trying to get to everybody who's sitting there and try to get some response to them, this is not the most conducive way to tackle something I think is a really, really serious problem, and I'm hoping that we'll revisit this again, Mr. Chairman. And I don't want to. I know you're going to say something. Do you want to respond to that?
I agree with you.
Okay.
And let me just tell you, this has been one of my kind of pet topics, and I see Mr. Lynch is on. He will recall when Mr. Todd Platt, Republican chairman of the subcommittee, was heavily involved in this, along with Mr. Lynch, and got me involved. And here we are, 4 bills later. 14 years later, and things are not better. And so we do need a new approach. And I do think this provides an opportunity for bipartisan cooperation to figure out what is that approach that hopefully will be efficacious and bring that number and percentage down and incentivize federal managers to take this seriously.
Yeah, I think that this is a nonpartisan issue. This is an American issue. And so can I need to read into the record just a couple of things. I yielded to you.
Absolutely.
Thanks. I want a piece from the New Jersey Monitor that says New Jersey fisheries netted $2.4 million in improper COVID payment. This is a Business Insider piece. This is a man was arrested after allegedly spending $5 million in stolen COVID-19 relief money on a Ferrari, Bentley, and Lamborghini sports cars. At least he had good taste. Then we move to the next one is Austin American Statement says, will prisoners also receive 1,400 stimulus checks? Mostly true.
Is the gentleman seeking unanimous consent?
Yes, I am on these. I'm sorry.
Without objection, it is so ordered, understanding, however, that when we are talking about improper payments, it's very rare. It's about a Lamborghini.
Yeah. Continuing on, Mr. Chairman.
Yes.
Another one, Dr. Ron Paul stops Democrats' attempt to give free money to Planned Parenthood, and I have a series of pieces on that. Moving to stimulus turns political as SBA tries to claw back funding from Planned Parenthood. And some more on that. And then how about this one? Made out like bandits, New York prisoners got $34 million in COVID stimulus funds. Biggest fraud in a generation, diluting the COVID relief plan known as PPP. Piece called Criminals Have Stolen Nearly $100 billion in COVID relief funds, Secret Service says. That's from NBC. Another NBC News, man who used COVID funds on a $57,000 Pokemon card received 3 years in prison. What the heck? Pokemon card. And that next one, from a CNBC Florida business owner, got $3.9 million in coronavirus relief money, spent it on a Lamborghini and luxury hotels, and it goes on. And I've got a whole stack of these things. They're just a small droplet in the big bucket of fraud and waste that occurred in the skyrocket of the last 2 years. But believe me, as a testimony as Mr. Chairman, and you know this was on the rise before we ever hit the COVID relief. So thank you, Mr. Chairman.
Without objection, is so ordered into the record. I would also ask unanimous consent to enter the GAO's report, a framework for managing fraud risks in federal programs, into the record as well. Without objection, it is so ordered. The gentleman from Maryland, Mr. Sarbanes, is recognized for his 5 minutes. Welcome.
Yeah, Mr. Chairman, thanks very much, and I want to thank our witnesses. I want to make sure I understand something. Maybe Ms. Miller, you could help with this. There is obviously situations in which payments go out to people that are intending to commit fraud against the system, and recovering that becomes very important, and having accountability measures in place up front is vital. But a lot of this overpayment is going to people that are deserving of the dollars. It's just the efforts to get those dollars out the door in a time-sensitive way, some of the problems with the technologies and systems that are delivering those dollars are such that an overpayment may occur to someone who is deserving. And then we have the challenge of trying to recover it. Is that the lion's share of what the overpayments look like, Ms. Miller?
Well, I think the short answer is no one really knows, because I think estimation of improper payments and certainly root causes is extremely difficult, and agencies have been unsuccessful to date in doing that effectively. But I would argue that in my experience at GAO, the majority of improper payments, while we don't know, and I don't think it's really important to try to understand someone's intent for the purposes of trying to make sure that money that someone's not getting a benefit that they're entitled to. All you really need to know is, did they circumvent a control advertently or inadvertently that enabled them to get something they weren't entitled to? I think getting intent out of this discussion is actually helpful, because we're really just trying to make sure we're safeguarding the integrity of the funds, not necessarily determining whether somebody had malintent.
Which is why building these protections on the front end is so important, because as you indicate, then you're not dependent on the intent in terms of the analysis you're doing around the overpayments. Mr. Jensen, why did the pay and chase approach become the norm for governments? Give me your perspective on that.
Thanks, Congressman. I don't think it is the norm. I think that daily, people running unemployment insurance programs, at least is what I'm familiar with, are trying to do everything they can to stop improper payments. The entire UI system is meant to do that, and so is the, trying to catch identity fraudsters and others. I think that we wind up in that circumstance too often, similar to, police departments trying to stop burglaries. But, I think it's an overstatement to say that no one's motivated to stop fraud and no one is doing it.
Okay, let me ask you and Ms. Miller this question. We've talked about if there was more accountability in terms of these program managers and others who are in a position to push dollars out the door, that would be helpful. And then we also know that technology is a huge part of this. What is the relative impact of those two things? In other words, you could have program managers who know that they're accountable, and they could have a terrible system available to them in terms of the technology, and there's not a lot that they can do. And you could also have the alternative scenario. How much is the technology preventing us from getting to a place where, with real accountability in place, we would actually fix this problem? And Ms. Miller, maybe you can start, and then Mr. Jensen, would be interesting to hear your perspective from the field.
Sure. I think that technology is a significant limitation in doing more to prevent and detect fraud and improper payments. I think it's technology, and I think it's data. Honestly, data sharing is so broken in government right now that even if you had technology, frankly, you wouldn't really be able to use it very well because there's so little data that agencies can access and use to meaningfully understand the extent that a payment might be improper. But technology, from a perspective of, the pandemic and the new wave that we're in now, the way that fraud is happening through cyber channels. So fraudsters are using all kinds of very advanced techniques to steal identities, and the agencies are still using, in many cases, knowledge-based authentication. They're not even using multi-factor authentication to verify the identity of an applicant. So it's a technology and a data problem, absolutely.
Thank you.
Mr. Jensen?
Mr. Jensen, real briefly, if you want to respond, because the gentleman's time has expired.
Sure. I think it's an application of technology challenge. So you need the technology, and you need to apply it prudently to what you're trying to do.
Thank you. We got to apply things. That's another watchword, applied things prudently. We should all live by that. All right. Gentleman from Georgia, Mr. Clyde, is recognized.
Thank you, Chairman Connolly and Ranking Member Heiss, for holding this very important hearing today. Part of this committee's mission is to look for and prevent government waste, fraud, and abuse. And today we are finally holding a hearing that is highlighting the Biden administration's failure to conduct oversight of government programs awarding improper payment, costing the federal government and American taxpayers billions of dollars every year. Improper payments have cost American taxpayers $281 billion alone in FY 2021. This is an increase from $108 billion in FY 2012. Just imagine if the federal government spent more time ensuring proper payments were being made, our national debt would probably not be as high as it is today. It is imperative that the federal government be good stewards of taxpayer funds, as each improper payment further erodes the trust of the American people in the security of the federal government. While federal agencies were quick to deliver financial relief to American taxpayers when COVID hit, it is extremely important to note that many of these agencies did not have the safeguards in place to forestall improper payments. In fact, in FY 2020 and FY 2021, the government-wide improper payment rate rose from 5.6% to 7.2%, largely due to problems with COVID-related relief funds. For example, experts believe that millions of dollars of unemployment benefits went to bad actors, and there's proof of it. Just yesterday, a man in Rhode Island was indicted for using stolen identities of others to file for COVID-related unemployment benefits. Ms. Miller, a question for you, ma'am. During his State of the Union address, President Biden acknowledged that fraud within the unemployment insurance program was egregious. What actions must the Biden administration immediately take to better investigate and to retrieve improperly received taxpayer funds distributed for pandemic unemployment insurance?
Well, I believe that there are a number of initiatives underway right now to do recovery. He obviously identified a federal prosecutor that would be in charge of COVID funding. There's also several law enforcement agencies. I worked at one of those oversight entities, the PRAC, which coordinates the work of several law enforcement agencies. There's a task force, a fraud task force that PRAC has created. The DOJ has multiple task forces, Secret Service, FBI. There are a variety of law enforcement agencies currently going after the fraud in the pandemic. The problem, there's not a limited number of oversight at this point. There's actually a limited number of people that can actually go back and do all of the investigative work that's going to be needed done to build cases to get prosecutions. But honestly, that is very little of that money is going to get recovered. Most of the pandemic spending was identity theft-based fraud. Identity theft, you're not going to recover that. Those guys are gone. They were not using identities that can be identified through a law enforcement investigation unless they can find a criminal ring, which is extremely challenging for them to find, so especially when they're offshore. So, I mean, I think, to me, I don't think there's a problem with a prosecutor, and I think it's great that we're going to try to claw back as much as we can. But going forward, I think the focus has to be on prevention and not so much on recovery.
Well, thank you, ma'am. So you think that pretty much what's out there that is gone already, and there's not much chance of getting it back?
I mean, I think some programs are more likely to recover more funding. PPP loans in particular are ones that are going to be more likely to get money back, but I think a lot of the unemployment assistance payments are going to be very difficult, if not impossible, to recover.
So therefore, we need to increase the safeguards on those programs right now, make them much more robust. All right, well, thank you. Question for Ms. Gressler. Do you believe the lack of safeguards implemented within the unemployment insurance program made these programs more vulnerable to bad actors, or if not, what do you think did make them more vulnerable?
Yes, I think it was absolutely that lack of safeguards and lack of any consequence when the payments went out the door. What I think is particularly troubling going forward is, yes, we have to address the existing improper payments within government programs already, but we're seeing from this administration proposals to make Americans dependent on the government, not just for things like unemployment insurance and Social Security, but for every part of their life, for childcare, for paid family leave, for pre-K. And so the bigger that the government grows, the more improper payments there are out there, but it's also not helpful for people. We've heard from Ms. Gilkinson, these programs are not easy to navigate. Who wants to go and fill out a bunch of paperwork and submit medical information to be able to receive paid family leave when we've seen in some of the states that have that? Washington State, for example, people were waiting weeks, if not months, when they weren't even able to apply until they had a need for leave, and so they didn't find out until months after they needed the money whether or not they were eligible for it. And so expanding government's reach into people's lives is not what empowers them. We need to look towards changing the nature of the programs that are out there and also towards not expanding them any further.
Thank you.
I would agree with that. Thank you very much. And with that, Mr. Chairman, I yield back.
Thank you, Mr. Clyde. Just for the record, I want to be clear, this hearing is not about any particular administration. It is a hearing in a long series of hearings this committee has had over the years looking at a chronic problem that has afflicted every administration, namely improper payments. And our hope is that we can arrive at some nonpartisan solutions that get at this. So I thank the gentleman. The gentlelady from Ohio, and forgive me if I overlooked you previously, Ms. Brown. I didn't mean to do that. You are recognized for your 5 minutes of questioning. Welcome.
No worries. Thank you, Chairman Connolly, for holding this hearing, and thank you to all the witnesses for joining us today. Do Not Pay, a program within the Bureau of the Fiscal Service at the Treasury Department, enables agencies and even states to access databases from across the government to verify payment criteria. Ms. Miller, can you please explain how federal and state agencies can utilize Do Not Pay to identify and prevent improper payments?
Yeah, well, agencies are encouraged and actually almost required by the Payment Integrity Information Act to use Do Not Pay to the extent that they can prior to making a payment. GAO has reported numerously over the years on agencies' limited ability to use Do Not Pay and the limitations within Do Not Pay. It's my opinion that Do Not Pay is broken and it needs significant enhancing. And if a centralized anti-fraud office were created, I think it would be really important to assign responsibility for improving that dramatically. The Pandemic Response Accountability Committee, the PRAC, where I was the Deputy Executive Director, created a Center of Excellence called the Pandemic Accountability Center of Excellence. And in just a short period of time, less than a year, the PACE, as it's known, has been able to pull in numerous data sources from private sector and across government, including a lot of hotline data that has been really valuable to them in their oversight efforts. I believe that Do Not Pay really needs significant overhaul. The databases in it need to be expanded, and agencies need to have more ability to access those data sets in order to be able to identify fraud, because right now that system is not working working anywhere nearly as well as it was intended to work.
Do Not Pay has identified or prevented $780 million in improper payments in its lifetime. And that is a lot of improper payments avoided. Yet, only 40% of states and not many more than 20 federal agencies out of hundreds that exist currently use the program. My question to this panel is, why? Why are many states and so many federal agencies choosing to forego Do Not Pay?
Well, I'll just say that I think it's because a lot of them don't even know how to access it, and because right now there's only limited numbers of data sets that they could use to access them. But I think also, as Mr. Jensen has mentioned, a lot of times at the state level, the data systems that states use, and Mr. Jensen can probably speak better to this, can have challenges accessing some of these data sources that federal government offers. There needs to be a lot better federal and state data sharing and accessing each other's systems, and I think that would improve the use of Do Not Pay.
And data infrastructure as well. During the pandemic, there are other systems like that to check on wages that were earned in other states and unemployment insurance. That immediately crashed. And if you had a claim that was in 2 states, you were not going to get paid for months and months until that system came back up. So to me, that's a function of not being on the cloud, not using contemporary technology.
One thing that I would also mention is that the states have a focus on fraud in terms of individual people, but like Ms. Miller has talked about today, she's mentioned identity stealing, cyber attacks. The technology that states have right now are not meant to catch people who are doing cyber attacks or who are stealing identities. It's meant to catch individual people. And oftentimes, the technology that's in place is catching people who are actually innocent. So there are a lot of people who are being accused of fraud, who are having to have benefits taken away from them, who actually were eligible and didn't do anything wrong, but the systems that are set up are catching those individual people versus focusing on international rings like that have been mentioned today. And I think that's important to have on record, because what we have that exists are solely based on, like I talked about in my oral testimony, stereotypes and things of that nature that are trying to catch people committing fraud that are not committing fraud, right? And so the increase in improper payments is based on not necessarily individual people who are all deserving, but based on, like Ms. Miller talked about, identity stealing, cyber attacks, the dark web. And right now I can tell you that state systems are not equipped whatsoever to take on those threats and attacks.
Thank you so much. My final question is for Ms. Miller. What can Congress do to encourage or require agency and state participation in Do Not Pay?
Well, I'm not sure that this is necessarily a Congress solution. I think that Treasury needs to improve the access to data that exists right now in Do Not Pay. I think OMB really needs to prioritize putting data sets into Do Not Pay. And Congress has already told agencies to use Do Not Pay prior to making payments. GAO has found that Do Not Pay actually matches payments after they're already made. So it's not even actually a prepayment system. So I'm not sure, besides Congress dedicating funding and leadership to overhauling and fixing Do Not Pay, I'm not sure how much more Congress can do.
Thank you. I thank my friend from Ohio. The gentleman from Kansas, Mr. LaTurner, is recognized for his 5 minutes. Mr. LaTurner's not here? Okay. All right. The gentleman from Massachusetts, Mr. Lynch, is recognized for his 5 minutes, a longtime proponent of addressing this subject, improper payments. Mr. Lynch.
You're too kind, Mr. Chairman. Thank you very much. And I want to compliment you as well as for pulling together such great witnesses who have been very helpful. I do want to remind my colleagues on the other side of the aisle that they seem to have forgotten this was actually, the CARES Act was actually $2 trillion was actually signed into law and deployed by the Trump administration. So I appreciate the bipartisan tone that the chairman has set, but there should be room for facts as well. After the CARES Act was passed, we got a report, I believe it was from GAO, that 75% of the fraud committed in connection with that funding occurred on financial technology platforms and APIs. So that I'd like to know from Ms. Miller, are we focusing on that fact and targeting where most of this fraud occurred? Is there any hope that perhaps two-factor authentication might be required by recipients in order to more deeply secure the funding flow to people who are deserving of those benefits?
Yeah, I believe that multi-factor authentication is one of many tools that agencies need to employ to ensure that applicants are who they say they are. There's been some NIST guidance. I think there's been some White House executive orders recently that have required agencies to use multi-factor authentication, as well as things like zero trust architecture. So there are a variety of cybersecurity initiatives underway. What I believe is there needs to be coordination between an anti-fraud entity that hopefully will exist at some point if some legislation is introduced that creates that office. That office needs to coordinate with the cybersecurity group, with CISA, and with NIST to make sure that there are anti-fraud controls that are required to be put in place, like the private sector currently has. Things like device fingerprinting, things like IP address checking to make sure that somebody who's using a phone or a computer is who they say they are. You can even use more advanced tools like behavioral biometrics. And so it's really important, I think, for this coordination to happen between the cybersecurity offices and the anti-fraud effort in order to make sure that these technologies are put in place and being able to be used to their greatest effect.
Well, I appreciate that. Ms. Miller, I would just note that we've been at this, at least Mr. Connolly and I, for about 14 years. So, you know, my own observation is that the government has been not been known for its speed in this area. You know, multi-factor authentication is something that we can adopt very simply. It's at the front end of this process. So while certainly the need for an anti-fraud agency won't go away, I think we can stop at the front end. A lot of this happen. If 75% of the fraud occurred on these, you know, fintech applications and fintech platforms, that should tell us something, right? The balance of it occurred, you know, through manual processes. You know, the SBA was trying to push out the money as quickly as possible. It was emergency funding and it needed to get out. So, you know, we own part of that because of the haste at which we acted and the president acted. But Ms. Gessler, do you have any different perspective on you know, multi-factor authentication, that it might prevent some of this stuff at the front end?
I think just allowing the agencies and the programs to determine what steps are necessary in their unique program. Sometimes it's as simple as verifying an ID and an income that might be already on a W-2 form. Other cases, it's verifying, is this child, you know, the legal guardian of this person? Are they living in the household? It gets more and more complicated along the way across these various programs. And so ensuring that the agencies can have the flexibility to choose which metrics are right for them, but that at the end of the day, they're held accountable to meet certain criteria to protect the integrity of those programs.
Thank you. And Ms. Gilkison, do you have any thoughts on this as well?
Thank you so much. Yes, I do. I think it's really important for us to begin to simplify access for people by streamlining eligibility and making sure. I think it's a really great point that you mentioned, that 75%, just like I mentioned before, of the fraud that was taking place was indeed technology systems. So I think it's important, as we simplify access for actual people and open the door for them to be able to have easier access, be able to submit their verifications more easily, that we can get access to folks better and then be able to prevent those cybersecurity systems from causing fraud.
Thank you so much, Mr. Chairman. I yield back.
I thank the gentleman and look forward to working with him on the legislation I mentioned a little bit earlier. You know, this is ground he's plowed before, and I know we all share the same goal of ultimately, in theory, trying to get improper payments down to zero. We will work together on that. I thank him. The chair recognizes himself for his 5 minutes. Mr. Jensen, if you'd put your state hat on for a minute. Does the federal government run Rhode Island's unemployment insurance system?
No.
Who runs it?
The state runs it.
Would that be true in, say, Georgia, too?
That would be true in every state.
Every state. So we have 50 different unemployment insurance systems. Is that correct?
That's right.
And how would you characterize the database management, the IT systems of those 50 states? Would you say they're in great shape and pretty efficient in catching errors?
They are old, many of them, and they are modernizing right now. And the virtue of some of the old ones is the people running those programs know how to use them. But there needs to be improvement in the technology.
Though I think you would concede, let's say you got a system based in COBOL. The population that knows COBOL is dwindling.
That is correct.
Yeah. And I can tell you that to Ms. Gilkison's point, as someone doing constituent work, when we had the beginning of the pandemic, when there were tens of millions of people filing for unemployment, even though it's a state responsibility, not a federal responsibility, I was inundated. And all of the cases were people who qualified but weren't getting their benefits, to your point, Ms. Gilkison. So, I mean, we can't lose sight of that while we're also trying to make sure every penny's accounted for. But there were lots of people desperate for that assistance. And because of the IT systems that could not handle the programming changes we made at the federal level and then the volume of demand, it just overwhelmed the system. And it was really quite problematic. I don't know if that reflected your experience.
Absolutely. That's why I referred to our experience in Rhode Island as the hardest C- I have ever earned.
Yeah. Thank you. I can tell you that was true in Virginia, too. Ms. Miller, talking about fraud, a few years ago, the U.S. Attorney in Boston decided to make Medicare fraud a priority for her office. And in that 1 year, they identified and mostly recovered about $3 billion in Medicare fraud. Now, that's one of 99 U.S. attorneys across the country. Do you believe that U.S. attorneys are taking this kind of fraud, whether it be Medicare or Medicaid or anything else for that matter, seriously? I mean, is it a high enough priority? Because when I saw that, I thought, well, that's pretty low-hanging fruit, apparently. And could that be replicated in other offices, and are we missing an opportunity here to, in fact, both make a statement in terms of criminal prosecution to disincentivize people from cheating or frauding, but also recovering taxpayer dollars?
I mean, I definitely think that there's no question that if you persevere and that is your focus, you're going to have results, and that is the main reason why we see such disparate results across agencies as well as U.S. attorneys or law enforcement agencies. U.S. attorneys' offices, from my experience at the PRAC, when we were working with other law enforcement agencies to refer cases, they are also, like many other agencies, very, very overwhelmed with cases, and so what they want is a really winnable case to get onto their desk. If we can develop really, really winnable cases to turn over to the U.S. Attorney's Office, and the U.S. Attorney makes that their priority, yeah, I think we could see significant increases in prosecution. But again, I do believe prevention is a better area for us to focus on.
I agree with you, but I'm hearkening back to something you also said. If we don't make this a priority for people, it won't be a priority. And it seems to me that, protecting taxpayer investments so that the people who need it are getting it, as opposed to it being diverted by fraudulent characters or even just mistakes, is in the public interest.
For sure, and I don't think it needs to be even, right? Like, I think there's this balance, and we're seeing agencies, the scale is towards get money out the door, and payment integrity, program integrity is very, very little. I don't think we're going to get it to 50-50, but we really need to move the needle. And again, it has to be, as Ms. Gensler was saying earlier, we don't see anyone sitting up here today, having to be held to account for why their improper payment rates are continuing to rise. They're not addressing the root causes of these problems. They're just reporting higher higher and higher rates. And there needs to be more accountability, I agree, and there needs to be focused on incentives and performance metrics that prioritize integrity to the degree that they also prioritize mission delivery.
And real briefly, if I can indulge just one more question for you. I mentioned that we passed, 4 bills in this time period that Mr. Lynch and others. Oh, I just see Ms. Porter coming. Okay, I'm going to recognize you in a second, Katie. OMB, pursuant to those laws, requires agencies to have a corrective action plan. Given your experience when you were at GAO, how well are those working? Because we don't seem to see the numbers coming down. And have we just succeeded in sort of getting more accurate data about how bad it is as opposed to actually getting that number down? Because that would seem to be what the charts, both Ms. Gensler's and my own, Gressler's and my own, would seem to suggest.
Yeah, I would say that we've gotten better at admiring the problem, but we've made almost no progress in actually fixing the problem.
Thank you. My time has expired. Ms. Porter, you're recognized for your 5 minutes of questioning. Welcome.
Thank you very much, and thank you, Mr. Chair, and to our staff on the committee for pulling together this hearing. Really appreciate it. Policymakers and our minority witness often talk about the trade-offs between fighting fraud and expanding access to programs. They say we can do one or the other, but not both. But when done right, governments can design programs to prevent improper payments and fulfill customer needs. Adrian, our witness from the Workers Lab, stated that government and the people it serves can both win. In December, President Biden issued an executive order with the title, Transforming Federal Customer Experience and Service Delivery to Rebuild Trust in Government. The executive order directed cabinet secretaries in 17 agencies to implement reforms to make government service easier to use and more transparent. These reforms have the potential to improve the federal customer experience and reduce improper payments. This executive order is a great step forward that we should be building on. In the past, the government has been way too slow to adopt new technologies to streamline government operations, make it easier to administer programs, and prevent fraud. Mr. Jensen, your organization is focused on helping the government use data and technology to improve programs. Mr. Jensen, can you provide an example of how technology can help the government reduce fraud while also providing benefits to those who qualify?
Sure. Thanks for the question. I'd like to congratulate Adrian on the solution they came up with, because that's exactly the kind of thing that needs to be done. For example, I mentioned this earlier, but to verify income for the PUA program, we were able to configure a way on the cloud where both the Labor Department and the Tax Department could say with a straight face that PII was not being shared between the two, so that both departments could be safe just in terms of not having any data breaches in that context. It worked great. So what we need to do is prioritize the kind of performance metrics that do require both a fraud detection and service delivery, and it can be done.
Ms. Miller, what private sector practices can government adopt or borrow to improve service delivery and program integrity?
The private sector focuses on something called friction when they apply technology to consider their customer user experience. The goal is to reduce friction to the lowest level possible, because you'll lose a customer, right? If you make it too difficult to get onto your app on your phone, or to transfer a payment, or to access any kind of service or benefit in a private sector company, they run the risk of losing that customer. So that friction piece is incredibly important. The government can learn from the private sector in the tools that they've employed that reduce friction. And today, we can use real-time data checks. There are data providers out there that have an enormous amount of data on every American citizen, data that can be checked within milliseconds of when you apply for something. So as soon as you log into an application, onto a website, it can tell you really quickly whether or not that's me or not. And these kinds of tools, they're in use every single day in private sector companies across the country and a globe. And these are the kinds of things we need to start to push government agencies to do so that they're not making it harder for citizens to access benefits, but at the same time, they're reducing the likelihood that they're actually a fraud actor and not a legitimate beneficiary.
I completely agree, Ms. Miller. And the federal government has to store and process massive amounts of information, massive amounts of data created by applicants for federal programs. But automation, data sharing, the techniques that you mentioned, including reducing friction, can help government agencies handle this challenge. There are just so many examples in this hearing of how government can use modern technology to both reduce fraud and improve customer experience for taxpayers. Ms. Gillickson, can the federal government, can you give an example or talk about from your perspective, is this possible? Can we reduce improper payments without making government services more difficult to access?
Absolutely. I definitely believe that we can reduce, could you repeat the question one more time? I apologize.
I think the question was, can't we reduce the probability of fraud or improper diversion of payments without making it harder for people who need the benefits to apply and get them?
Absolutely. I think it goes back to the point that I made earlier of us shifting our focus on individual people who are innocent and shifting our focus towards, like Ms. Miller talked about, the computer systems. And I love that you made the point about reducing friction. I'm going to take that word, that phrase that you said, and the ability to reduce friction and make it easier for folks to access benefits. So in an OMB report, it reports that administrative burden and difficult applications often block those who need benefits the most from receiving them and exacerbates racial inequity. So making the application process, making it harder to access benefits is the issue that we're experiencing right now as to why improper payments are higher, because it increases the error rate. So reducing friction, like Ms. Miller mentioned, I think will be great in helping to make sure that we reduce fraud and also increase access.
Thank you, and I thank the gentlelady. Mr. Turner, you're back. You are recognized.
I'm back, Mr. Chairman.
You're back. So you're recognized for your 5 minutes of questioning. Welcome.
Thank you. Good morning, and thank you for having this hearing, Mr. Chairman. I really do appreciate it. My first questions are for Ms. Gressler. Ms. Gressler, the pandemic relief funds were disproportionately susceptible to fraud and abuse, which many of my Republican colleagues had predicted prior to their passage. However, fraud and overpayments have been a consistent problem in other federal programs for years. In your testimony, you used the Earned Income Tax Credit as one example, pointing out that on average, about a quarter of EITC dollars were claimed incorrectly over the past decade. You talked about possible actions the administration could take, but what legislative actions have been taken in the past or could be taken now to mitigate these issues?
Yes, so specifically dealing with the Earned Income Tax Credit, there it's verifying the income that was made, and that also depends on whether or not you're married and the number of children who are in the home. And so that's where it gets difficult, and this is not an easy thing to design a government program and to get the benefits to the people you need when those needs get more specific in terms of what you want, because it gets to the eligibility side. And so ID checks are pretty simple. That's something that across the board we should absolutely be doing. But then when you have the eligibility standards, unless we get to a point where people are going to be comfortable with the government having direct access to their bank account, having access to their medical records, perhaps even having a video into their home to see, is this child who you say is living with you actually living there? Those are the types of things. There has to be a check that that child exists, they're living there, and then also the income that's coming in, and not all the time is that income going to be on a W-2 statement. As Adrian mentioned, we have more than a third of the workforce now that are working independently in these flexible type jobs. Some of the time that will show up easily on an app if you're driving for Uber, where all of the money is in one place. But if you're doing things on the side through your own business, and maybe it was a cash payment, it's a lot more difficult to track. And having to gather all of that information and to submit it is difficult. And that's where we hear, people don't get the benefits that they may be entitled to because it's a cumbersome process, and oftentimes it's the people who need them most who find it the most difficult to do that, and it's the criminals who understand the system who can get access to the benefits easiest.
Yeah, no, I understand what you're saying. And it certainly is not without a lot of difficulty. At the beginning of this month, as I know you're aware, the White House released a statement which claimed the Biden administration had begun to take actions to combat fraud in the pandemic relief programs. Beyond implementing new retroactive reporting requirements and payment audits, how can we leverage existing federal information security infrastructure to make more accurate eligibility determinations?
I think it's important that the administration tasks these agencies and the programs that they're running with clear standards. And what is their expectation? If your improper payment rate is 22% this year, and it should be expected to get down to 10% over X time period, and what will be the consequences if it doesn't in terms of your funding levels? There need to be actual teeth put on these so that people will be held accountable. Otherwise, you're just not going to get to the outcomes.
I appreciate that, and thank you for your time. Ms. Miller, I would like to speak to you on your experience as a former assistant director in the Forensic Audits and Investigative Services Division of the Government Accountability Office. When making eligibility determinations for federal programs, agencies often need access to sensitive data. We were just talking about this, such as income, social security numbers, tax information. In your opinion, is our current cybersecurity infrastructure prepared to accommodate increased data sharing across federal agencies?
I don't think that data sharing is a cybersecurity issue. I think that the data, getting access to data and being able to create the secure portals to use that data, the ability to mask personally identifiable information, none of this is beyond the capabilities of federal agencies. They're all able to do this. The key is to require them to do it. And the challenge that they have is these data sharing agreements, they take very long time to access. I mean, I was speaking with my former chief data officer at the PRAC, and he said, anytime I ask for a data set, the first answer is always no. They start with no. And then we try to get to yes. I mean, that's what's so challenging. We are not setting up a system for data sharing in the government that encourages it. There's a deep discouragement of sharing data, and you have to have enormous amounts of will to overcome the political, the legislative, and the technological and bureaucratic barriers in order to be able to do it. And we have to remove those barriers. So what can Congress do? Help remove those barriers.
I understand what you're saying, and my time's running out, but really quickly, I don't want to mischaracterize what you were saying, but we have the ability to do it, and we should do more of it, but you don't have concerns about the security of that data once we have it, or once we have more of it.
We can hash, I don't want to get technical here, but we can hash data. Many agencies hash data now. IRS hashes data. So there are tools that federal agencies can use to mask personally identifiable information, to encrypt it so that it can be only used. You can use public encryption keys. The agencies have the technology right now. It's not that they don't have that technology. It's that they aren't using it.
Thank you. Thank you, Mr. Chairman. I yield back.
I thank you, Mr. Turner. And to your point, Ms. Miller, I remember when the OPM, the Office of Personnel Management breach occurred, so 2 administrations ago. They had not yet installed the Einstein 2 encryption, and as a result, that could have helped prevent the breach or mitigated the breach, and as a result, of course, the data of 24 million fellow citizens was
I do want to
compromised.
note that data breaches are going to happen. They're just a fact of life. We aren't going to be able to say, the solution is let's not share personally identifiable information because we don't want to be compromised. It's going to get compromised, and every single U.S. citizen's data has already been compromised and for sale right now on the dark web. The important thing here today, I think, is to understand that they're already using this data. They have the data. They're using the data against us, and we are limiting our ability to fight them by protecting privacy to the degree that we're protecting it right now at the expense of being able to use technology to fight fraud.
Thank you. Anything for the record, Mr. Heiss? Seeing and hearing none, without objection, all members will have 5 days in which to submit through the chair additional questions for our witnesses. And I would ask, should such questions be presented to you, if you could try to answer them in an expeditious fashion for the record, that would be great. If there's nothing else to come before us, we are adjourned. I thank our witnesses.